Welcome to this lesson on alternative investment types. Investing is not just about stocks and bonds. In recent years, alternative investments such as commodities, precious metals, and cryptocurrency have gained popularity among investors. In this video, we'll introduce alternative investments and explore their potential role in a diversified investment portfolio. Please be sure to like, comment, and share this content so we can be sure to help as many people with this work as possible. Commodities. Commodities are raw materials such as gold, silver, oil, and wheat. Commodities have been a part of human commerce for thousands of years and have proven to be a valuable asset class for investors. Investors can invest in commodities directly through futures contracts or through exchange-traded funds, ETFs, that track commodity prices. One of the benefits of investing in commodities is that they are not correlated with the stock market, meaning their prices tend to move independently. This can provide diversification benefits to investors during periods of market volatility. However, investing in commodities also comes with its own set of risks. Commodity prices can be volatile and are susceptible to supply and demand imbalances, geopolitical events, and natural disasters. Precious metals. Precious metals such as gold and silver have been used as a store of value for centuries and have proven to be a safe haven asset during times of economic uncertainty. Gold, in particular, is often used as a hedge against inflation, as its price tends to rise when the value of money decreases. Investors can invest in precious metals through bullion, coins, or ETFs. Like commodities, precious metals are not correlated with the stock market and can provide diversification benefits. However, investing in precious metals also comes with its own set of risks. The prices of precious metals can be volatile, and the market is often driven by sentiment, making it susceptible to speculation and market manipulation. Cryptocurrency. Cryptocurrency is a digital asset that uses encryption techniques to secure transactions and control the creation of new units. The most well-known cryptocurrency is Bitcoin, which was created in 2009. This is closely followed by Ethereum, which is the largest cryptocurrency platform that most other crypto assets are built on. Cryptocurrency has gained popularity in recent years due to its decentralized nature, high volatility, and potential for high returns. However, investing in cryptocurrency comes with a high level of risk, as its value is not backed by a government or central authority, and its regulation is still in its early stages. Though, if you wish to learn more about cryptocurrency, I would highly recommend checking out the YouTube channel Whiteboard Crypto, who does instructional videos like our channel specifically tailored to that space. Investors can invest in cryptocurrency through exchanges, digital wallets, or ETFs. Considerations for alternative investments. While alternative investments such as commodities, precious metals, and cryptocurrency can provide diversification benefits to investors, it is important to understand the risks associated with each asset class. Alternative investments should only make up a small portion of a well-diversified investment portfolio and should be considered by investors who have a high tolerance for risk and are comfortable with the volatility that comes with these types of investments. Please take a moment to like, comment, and subscribe to our channel if you like our work. Share it with your friends and families if you think it would help benefit them also. Alternative investments such as commodities, precious metals, and cryptocurrency can provide diversification benefits to investors. But it is important to understand the risks associated with each asset class. Before investing in alternative investments, it is essential to have a clear investment strategy, understand your risk tolerance, and seek the advice of a financial professional for minimal risk in investing. We'll see you next time.